So let's quickly talk about a popular chart reversal patterns in Forex trading. Well, so if you're a Forex trader, you should have popularly come across the word double top and double bottoms. So in the table of contents, we're going to look into introduction of double tops and double bottoms, which are the reversal chart patterns. But we're going to talk about trading strategies to these double tops and double bottoms, and the advantages and limitations and tips for effective use. So, what is a double top and double bottom? They are just popular reversal chart patterns. It's as simple as that. I like to keep my things very simple and very organized. So, double top and a double bottom are reversal chart patterns in the market. They give you a sign of change of character or change of price action. So for a double top, you have a bullish trend, a weak support, a strong resistance, and a support turn resistance. And for a double bottom, we have a bearish trend, a weak resistance, a strong support, and a resistance turn support. But this is a typical graphical drawing on how a double top and a double bottom is. And like my other classes, I've explained to you, like the things that you see on the internet is not exactly how it seems. The things you see are not exactly how it seems. So I'm going to show you how you can actually identify the right double top and double bottom and how to apply this technique to be a successful trader in trading the double tops and double bottom reverse patterns. So first, like I said, you have to know what exactly you're looking for. So a double top, like I said, you can find a double top for a reversal. So here we have a double bottom. So for the double bottom, if you're looking for a double bottom for reversal, then clearly you must be in a downtrend for you to apply a double bottom, because a double bottom shows a signal for an uptrend. So the key signs to take for this reversal double bottom chart pattern. First, you have to confirm that the price tested a zone twice, forming a secondary support in a downtrend. Now, secondly, you have to find a weak sign of secondary resistance, which is the neckline. So you can see that the price falls down to a price level and goes up and finds support and pushes it down again, but they break even because they come to the same zone where it was rejected before. And when the price forms, once the price rejects again, it means it's been tested twice. And it's been tested twice as a support, making it strong. And the resistance has been tested once. So if it breaks through the resistance, it comes to sit on the resistance as a support, like I've explained to you about support and resistance in my class, and then it goes up. So what you'll be looking for is a support level. If you're looking for a double bottom, you'll be looking for a support level where the price makes a primary support, and then you're going to check for the resistance level where it makes a secondary resistance, which isn't strong enough to push the price below the support, and which is the neckline. And when the price goes above the secondary resistance, it finds support, turning the resistance to support. Once you have that, that is where to take your entry. Most aggressive traders decide to take their entry on the second touch of support. But if you are fairly into trading and you want to be very accurate, you have to wait for it to go above the neckline, and then you take your entry, and your stop loss should be fairly below the new support zone, and you can write the profits. It's usually advisable to take the same amounts, the same length of the neckline to the support as your take profit. when not to trade a double bottom chart pattern. Now, you don't trade a double bottom when it's against a moving average support or resistance, because literally there is another support on the way. So if you have the price falling down and it forms a support, and then it goes to the neckline, and then it comes back down and finds another support. If it was to break through, we have a moving average resistance that has held so many time frames to keep it on the higher zone. So it's most likely that even if it breaks through the moving average, it's going to fall down. And you might think, obviously, it's supposed to go and you're supposed to ride a profit, but it's then going to reverse and then you're going to fail. And that is why most traders fail. You don't take double bottoms or double tops against a support or a resistance level in a moving average if you do not take it against a psychological support or resistance level. When not to trade a double bottom chart pattern again. Here is another example. So we can see we are already in an uptrend, and then you find a double bottom again, and then you create your neckline, you create your psychological neckline, and then you see when the price goes up, it doesn't go up like it should. On the base, you can see below in the downtrend where there's a double bottom here, you can see it's moved so much. But on the uptrend, on the uptrend, when the price is above the moving average, you take an uptrend, you look at a double bottom, and then you take the trade and it falls down. And then you find yourself losing a double bottom and think it doesn't work. No, it does work. Most traders don't tell you this, but you need to confirm if there's any psychological level that has a very strong resistance. And if you look on the left side, you can see a very strong psychological level where that area and that zone push the price very strong downwards on the downward level. So that's a very strong psychological level. So it's very possible, bound to know that a double bottom will fail because the psychological level has tested on several counts, several hours time frame that made a big effect. So this new influx of buyers cannot do as much. So remember, do not trade against the moving average support or resistance, and do not trade against a psychological support or resistance. Now, this is a double top chart pattern. So you're looking at the price go up, finds a resistance, it goes down, finds a secondary support, which is a weak one, because it cannot push the price above the previous level on high. And then it comes to the primary resistance and pushes the price down. Now the price comes back to this support and turns resistance, pushing the price down, and you ride your profits. So remember, what are the key signs to take a reverse chart pattern? First, it has to have tested twice on the zone forming a primary resistance. Secondly, a weak sign of secondary support. Thirdly, you must be in an uptrend. It signals an exhaustion of buyers. And fourthly, it has to retest on the secondary support, turning it into a new resistance. Now, the advanced divergence trading double top with an RSI indicator. This is very important, guys. This is a very important strategy for you to keep in your double bottom and double top reverse pattern strategy. Now, most traders get tired and get exhausted trading because they feel that the smart money concept, double tops, head and shoulders, flying wedge, bullish flags, they don't work. They don't work because you don't pay attention to the momentum. You don't pay attention to momentum in indicators. It shows you the strength of the current price. I keep repeating this and I keep stressing it. You need to have a momentum indicator right in front of you so you don't just take any action in the market. even if you don't look at the overbought zone and oversold zone, you need to be able to identify the strength levels and how much the levels has influenced the market at the current price. So the key signs for a double top, remember, like I said, it has to be above the moving average. And as you can see, since it's close to the moving average on a normal day, on a normal way out, you shouldn't have traded this because it's close to the moving average, making it a support. But regardless of that, it's still pushed below, which is a dangerous way to trade it. But because you have a momentum indicator, you ensure that irregardless of the moving average, it would still perform its duties as a double top. So key signs to take a reversal chart pattern, it has to have tested twice on a zone forming a primary resistance. Secondly, a weak sign of secondary supports. Thirdly, it has to be in an uptrend, signaling exhaustions of buyers. And fourthly, it has to retest on the secondary support, turning it into a new resistance. And the fifth sign is to show a low momentum to confirm exhaustions of sellers. As you can see, the price goes up, forms a resistance, and then goes down to form a support, and then goes up to find a resistance. And as you can see on the RSI downwards here, equivalently, you can see the price was high here, and on the second time when it touches the resistance, it goes extremely lower. It moves literally from 80 to 60. So automatically you can see that there is an exhaustion of buyers, and you are sure the price must fall. And then you take it, and it would be a successful one. You would have no reason to panic. And same thing for advanced divergence trading double bottoms with RSI indicator. So first you have to find a test. Number one, test twice on a zone forming a primary support. Secondly, you have to look for a weak sign of secondary resistance. Thirdly, you have to look at it and confirm is a downtrend through the moving average. So exhaustions of sellers. And fourthly, you have to look at the retest on the secondary resistance, turning it into a new support. So you can see the price falls on the previous resistance, turning it into a new support. And on the fifth sign, you have to look at your momentum indicator, RSI, and look for a signal of low momentum, of a change of momentum shift, signaling exhaustions of sellers. As you can see, it gets the resistance first time, and it gets to up and goes to the resistance secondly. And you can see the price falls below 30, and goes above to over 37 to 40, signaling a strength. It's inclined. So it shows an influx of buyers in the markets. So it means there's an exhaustion of sellers, and it's going to go above. So this is how you should trade a double bottom. There's no indicator to this, so I wouldn't have to show you how to click and find the indicator. You already know the RSI, you know how to apply the RSI. So all you just have to do is look at this confirmations and entry signals before you trade a double bottom or a double top. They're usually found every single time when the price wants to go down or go up. So thank you, and I'll see you in the next class.